Treasury yields remain in the range, although we are starting to test the high end of that range. Recall the range, we kind of called it 260 to 280. We struggled to get north of 275. We did, and now we can't get away from 275. So we sit there. We did test 280 a day or two ago. Nothing really transpired from it. Market has rallied back since, but is sort of spinning its tires, waiting for that next catalyst moment. We're seeing a very similar trade going on in gold, where it is also stuck in a range, and it has just hit one of its parameters, but is back inside that range. So again, these riskless assets are starting to find a bit of a range, and we're seeing that with the idea that uncertainty is building, a lot of events coming up down the road, and the market participants maybe just want to take a few chips off the table, or at least wait and watch and see where to get back in. And if you look at market volatility in Treasury space, well, as we get closer to breaking out of the range, it looks like volatility is going to bid, and that means lower yields. If we get back into the old range, which means higher yields, Treasury volatility tends to soften, and we did see that softening as we traded back towards 280. However, things have kind of stopped going down. The decreases have slowed, and we've seen volatility kind of start to uptick again, with the idea that, yeah, there are some concerns out there. We've got a lot of fundamental news going on, whether it be earnings, whether it be the Fed, whether it be trade talks with China coming back into the headlines, whether it be Brexit. There's a lot of things going on in there. And then you have this shutdown, which is really causing a headache, more political, I think, than anything else at this point. But things like the CFTC reports that we use to gauge positioning in treasuries, in futures, and not only in treasuries, but in gold and others, we're not getting those. So it is starting to kind of leak into everyone's world a little bit here and there. But ultimately, what we're getting at today is hearing from Davos that there are concerns of growth, global growth. Where's it going to stop? Where's it going to be worse? Where's it maybe going to miss? And I think right now we're getting the idea that at the end of this month at the Fed meeting, we're likely going to hear from Fed Powell, Chairman Powell. Don't forget, he instituted Fed press conferences at the end of each FOMC starting this month. So he is now going to be speaking. We won't get the forward guidance numbers that we typically get quarterly, but we will get him. I think he's going to start to talk maybe a little bit more specific about growth expectations, not only here in the States, but also globally and how they're interacted. Because right now the Fed is really kind of handcuffed into probably no change in rates, at least for the first half of this year. Things could always change, not only with the U.S., but globally. And if you have Brexit coming up at the end of March, that's going to kind of put a little bit of a hindrance on anyone looking to tighten policy anywhere, given the fact that the uncertainties still revolve around that. We add to that the global growth issues that we're having. Uncertainties with China have always been there. They probably will continue to be there whether we have a deal or not. And I think that ultimately here in the States, we want to see numbers come out. But unfortunately, like I said, we haven't been able to see those numbers yet, or at least a lot of them, due to the fact of the shutdown. So right now, the market's sort of waiting for that next catalyst moment as Treasury yields trade the range. We do have an FOMC meeting at the end of this month, followed by the semi-annual testimony from the Fed chair in February, followed by the Brexit in March. So we do have some things lined up that could change things very quickly, but unfortunately not tomorrow, so we have to wait until later on this month before we get things kicked off. But Treasury yields remain in a range until we get there.